How you guys doing? I hope you're doing fine. I hope you're doing wonderful. This is an update for the market, and as I stated in my last video, I have a structured bearish scenario that worked in the past, and I really don't know if it's going to work in the future, yet I believe in it. Okay, so this is the equity put to call, and the closing was 42, which means more bulls than bears. Okay, 0.42 the ratio. Okay, in this put to call, you can see the importance of positive divergences and negative divergences to predict a next wave of of increase in equity put to call. As a result of that, because it's inversely related to the Dow, this makes the Dow go down. Okay, so what do I see? What's the bullishness here, which means bearishness in the market? First, a solid positive divergence. You can see in stochastic and the price action. Good. Another thing. Usually when it goes to that low in the past, say a year or so, because I only seen it in the last 6 months, so let's say 6 months. Okay, most of the times it results in a sell-off in the market, an increase in the put to call, equity put to call. It was true in June when it reached the 30s. It was 1,000 points in July. It was a tremendous sell-off in September, and October was a huge sell-off too. So three of them were really large sell-offs, and one of them is almost 1,000 points, more over than 1,000 points. So it's a huge sell-off too. So at least 5% in the past, up to almost 10%. Okay. Another positive thing I see for the equity put to call is most of the times when the stochastics dipped twice, 1, 2, a sell-off occurs. A sell-off in the market and an increase in the put to call. Okay. So you can see that. 1, 2, or 1, 2, 1, 2, and that resulted. Okay. 1. You can think of this as 1, 2, and that resulted. Same here. 1, 2. Here it's 3, as a matter of fact. It's really not a solid rule, but I usually care about the second dip and coming out in a stochastic overall. Okay, so in my view, this is important, especially came with a positive divergence too. Another thing which is really reliable, which is the bullish crossover in the MACD. And last time this happened, this huge sell-off happened in October, and before that, a huge sell-off in September. And before that, it's a mini one. And before that, another mini one. And before that, a huge one in June. And small ones along the way, from April to June. They were huge too, by the way, at that time. Up to 8%, 10%. So it's really not to be taken lightly. And I could prove that going back for years. And I hope this illustration showed you guys, Kareem and Abdul-Jabbar, that this is really important. Okay, you could pause, you could look at it. Okay, okay, good deal. So it's not really anything to ignore. And this is the dollar USD DXY. And as I stated in the last video and in many tweets I did, and even LinkedIn, that this area was a place of buyers for it was a target of two type of ABCs. The big one, ABC in the green, which is this one. It met this target right here. Where are we? Right here. So it's sufficient for this one. And the little one, it was perfect target of 162. So usually when you have places of buyers, people gather and buy it up. Okay? Good deal. So another thing, another positive thing for the dollar is the stochastic coming out of oversold over 20, which usually results of something always. Look at this one right here. Result of this. These many ones, as I said, second, 1, 2, and this one, 1, 2, and this resulted in that. So it's really to be taken seriously for the dollar too. So and another thing too, the RSI, every time it comes out of oversold, you would have a big, large momentum that comes with it. And this was true when the DXY was at 92, almost a month later, it was almost 95, which is really huge in the currency market. So I hope this structure is clear for everybody. So I started with a put to call. Then I moved on to the dollar, which supposedly the safe haven, at least for the next 2 weeks. Okay, so let's look at the VIX. Okay, even the VIX itself, as I said, it's coming out of oversold. And a lot of things happen when you come out of oversold. This happened. This happened. This happened. Also, this mini one is big. This happened. So it's really not to be taken seriously. In addition to that, it came with a positive divergence, which I really take seriously. Right here. Right here. And this is a bullish wedge right here. And it's in breakout mode. In addition to that, this is a bullish engulfing in the Japanese candles. No one knows the future, but as I said, I have a structure, bearish scenario. So, to recap, put your call that worked in the past, USD, DXY, that worked in the past, VIX, that worked in the past, that might provide volatility. Now let's look at the Dow. It's the same thing. You have the same idea. So I'm not doing any speculation via Elliott wave. I'm just doing things after the fact, like conventional technical analysis. So you have a high in the 18th of November and another high in December. And you have a negative divergence right here in the stochastic. Good. It's very obvious. So you could pause and see what happened in the past when you have this negative divergence. Okay. And you can see it right here. So is it to be taken seriously? Absolutely. Did it work in the past? All the way. The percentage, in the past, it worked 100% of the times. Will it work in the future? No one knows. Okay. But it's structure. It's based on something. It's not based on darkness. Okay. Good. It's very obvious. And the opposite is true when you have a positive divergence right here. And good things happen. Okay? So it's to be taken seriously. Another addition is the bearish crossover in the MACD. So let's these same circumstances take place. Negative divergence, bearish crossover. This one you have a bearish crossover, but not negative divergence. So I'm going to forget about this one, even though it's important. So negative divergence, bearish crossover, sell off. Negative divergence, bearish crossover, mini one. It was. I think this is a sell off too, but in comparison to the overall picture, it's nothing. But it resulted in something, even though this is an equal divergence. It's not really severe, and the duration is short. This one is longer in duration and an obvious negative divergence. And this happened also in April. The same circumstance. Okay, so it's really obvious that the bearish scenario is structured on historical behavior. So do we have any sell signal now? Absolutely not. Sell signal, you would have to close below the 10-day moving average, and you would have a follow through in the Japanese candles. Okay, so this one is you've been having 3 bearish, actually 1, 2, 3, 4, 5. You've been having a lot of bearish candles in the past, but you didn't have any sell signal yet. You got to be careful with these bearish structure. So conclusion, bearishness in the Dow, VIX bullishness in the USD, and bullishness in the VIX. So please like if you like, subscribe if this is the first time, and please do remember that a disco is forever.